Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar has slipped to a fresh 2.5-year low of 63.42 today, following Friday's solid US jobs report for September. That has increased the likelihood that the US Federal Reserve will barrel ahead with further interest rate hikes. It has, however, rattled the markets due to the fact that they are foreseeing the US economy possibly slipping further into a recession. On Friday, the Labour Department reported that the US economy added 263,000 jobs in September, above the market estimate, while the unemployment rate unexpectedly fell to 3.5% from 3.7% in the previous month. The market expectations for the US non-farm payrolls was around 250,000 jobs added. Looking ahead, Australia has little economic data to give, and therefore all eyes will be looking at the US Consumer Price Index, which is expected to provide a key snapshot of where the US inflation stands. In the US, however, markets may be a little bit quiet due to the US closed in observance of Columbus Day. So looking at the technicals, we can see the market is still plummeting. We've got an overheated ADX to support the bear case. Nevertheless, the call is still towards 62.45.60 as a potential target. And if it reaches that area, then we could see a bullish response and maybe even see a rebound. Any upside attempts would need to clear 63.80 to get further guidance towards a 64.35.45. The euro market is still weighing on the downside after the third consecutive day, which is Friday, posted a fresh intraday low around 97.40.50 area. In light of the dollar index, which measures the greenback strength against a basket of 6 major currencies, surges on Friday to 112.75 before back into 112.50 in New York close, still holds to its gains. So let's see if the market can take out the level of 97.20. That is a key point to assess further downside risk, as this would open way towards 96.75 and then 96.20.25 beneath there. With the market edging higher in dollar yen of 145.66, the Japan is actually closed in observance of Health Sports Day. Still, the market is a little bit likely to be very cautious above this level. For myself, I would not trade above here due to the recent whipsaw price action, but staying that, if a bearish action comes through like previously, then we could see the market plummet back towards 142.60.70, where I've outlined it in blue. Sterling still remains somewhat negative since the rejection of 114.80.90, and from there, looking towards the objective, that is around 109.75, or even touch lower to around 109.15.30. In light of the technicals, does weigh on the downside. Even gold is finding difficulty in recapturing its momentum since taking out 1,702, has reinstated further risk towards 1,682.83. Given that the technicals are heavy, and the fact is that we could see a break of this level, that would expose the region of 1,655. And finishing up with oil, well, the market rallied to a 5-week high, and that is around the 92 area, but backing away currently at the moment. Nevertheless, a bit of a pause in the bull run, and as long as we maintain above 88.65.75, then the risk is that we could see further upside movement, and that is to look towards 96.5 to 97.25 before any reversal in this trend. And that wraps it to the start of this week. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the rest of the day.